Things in the political world remain very strange. So if you haven't been paying attention, we are in the midst of a full-scale political season right now, which means we've got a presidential election going on. We have local and state elections that are going to have major consequence across the United States. And this is all coupled with an economy that is starting to show some cracks. So people are feeling a lot of anxiety, a little bit nervous, and honestly have been very easily triggered at even the mention of a candidate's name, political party affiliation, or just from watching the news. Now, this is going to be a little bit provocative, but I want to talk about the presidential election. And I don't want to get into policies or who anyone's voting for or who I'm endorsing or not endorsing, who's too old, who's too young, none of that stuff. We're going to talk specifically about what each of the three candidates, Donald Trump, RFK Jr., and President Biden, might bring to the table in terms of housing policy. What influence are they going to have to help us deal with this inventory crisis that we're in the middle of? What are they going to do to continue to incentivize people to want to invest in real estate and keep the access to it, more importantly, in the way of credit, still free flowing? So we're going to break down the policies of all three, just so you have a very clear and simple understanding of where each of these candidates land right now on the topic of housing and how it's going to impact you. Because if you are between the ages of 20 and 40 and you live in a major market and you're looking to either buy a home for the first time or finally invest into real estate, then this is going to be really pivotal for you, because I always want to make sure that you have information at your disposal that will help you make the best informed decision about taking out mortgage debt. So hello everybody, my name is Arjun Dhingra. I'm a two-time Taekwondo world champion, a content creator, and a very strong advocate for people making better decisions around taking out debt and using it to their advantage. I work with a range of people who invest into real estate, but particularly love serving first-time homebuyers, people that just locate to a major market like here in the San Francisco Bay Area and are looking to finally get onto the property ladder, especially when it's really difficult and challenging. Those are the situations I love most. If you could please do me a favor and subscribe to this channel so that I can reach more people like you, and also feel free to comment and drop your thoughts on any of these candidates that we're about to present today and give me your insights, because I want to always take a good pulse from my audience as to what people actually know about these candidates and whether they're in alignment with them when it comes to housing. Now again, I'm going to disclose, guys, as we get into the video here today, this is not an endorsement of any one candidate, party, or actual stance. I simply want to present to you what all three major presidential candidates who are going to be on the ballot across pretty much every state could bring, if elected, to the housing market and the overall economy pertaining to real estate. This is important because real estate is actually a huge component of the entire United States economy, if you think about it, because it's not just the physical structure of the property, it's the people that are involved, the actual ancillary or adjacent industries that are affected, which is construction and development, title companies, real estate agents, commercial and residential mortgage agents that are involved, appraisers. The list goes on and on. So there's a massive ripple effect when we're talking about real estate and how it impacts the overall US economy, which is why this topic is so important. Now, we're at a pivotal time right now in the United States economy. So the next president that takes over office is going to have significant influence over what's going to ultimately happen with housing and how we're going to address the challenges that are surrounding it right now. First, let's talk about the current market as it sits now here in 2024. We basically have three areas to touch on. First is affordability. This has been a significant challenge for everyone in the economy, but most particularly first-time home buyers, because home prices have risen at the fastest clip ever in history for the United States. Now, I'll get into just here in a quick second as to why they've risen as fast as they have, but the most important thing here is that this is a serious issue and barrier to actual ownership. Next is supply and demand. This is really simple economics 101, but we have way too many people who are in demand of homes and too few homes out there. In fact, there is an imbalance here in the United States of roughly 4 million homes to available buyers who have their hand in the air saying, I want a home. What that means is we have that many more eligible buyers or people that acknowledge themselves as being active and looking for a property in the market to an actual property that's available to them. Now, this has happened for a few reasons, but the simple thing to keep in mind is that we have had more household formations in the last 10 years than ever in the history of the United States economy, meaning people are joining forces, coupling up, partnering up, combining resources, and seeking to invest in real estate. We also have better earning power than we've ever had, and this is in large thanks to the gig economy. People are coming into money at a much earlier time in their life because of the ability to put out effort or work and have it result in immediate income or reward. The smart ones have been saving it and then look to invest into real estate. So when you combine both of these factors, household formations and the fact that people are earning more at younger ages, you've had a huge spike in eligible buyers or demand. And again, the supply for homes just has not been able to keep up. Last is interest rates. Now, mortgage rates will move in lockstep with inflation. So these are not to be confused with the interest rates that are controlled by the Fed, which is namely the federal funds rate. That particular rate is the rate of interest at which banks trade money back and forth overnight to one another. Mortgage rates will move in lockstep with inflation. So because inflation became a household term and was no longer actually dismissed as just being transitory, like we were all gaslit into believing at one point, or attempted to. But this is why rates went up as fast as they did. In fact, they hit a 25-year high just this last October of 2023, basically falling just short of 8%. Now, when you're coming off of historical lows of rates that were averaging somewhere in the 3% range, this does a number of things. It spooks people, it hurts affordability, and it can ultimately slow down a market. So those are your three trends. And on the topic of inflation, let's quickly define it. Inflation, simply put, is too many dollars chasing too few goods. If you have only a few things that are out there and a lot of dollars chasing it, it's going to run up the price. So that's the simplest way to explain what inflation is, and we certainly have it in housing. There's been access to really cheap credit because of low interest rates, a lot of eligible buyers out there that are willing to throw anything and everything to land their home or investment property, and because there's too few homes or properties that are out there, you get runaway prices. Think back to the COVID market where you had bidding wars, people paying hundreds of thousands, even millions of dollars in certain crazy markets above the asking price just to get the property. Now, I'm not endorsing any of that behavior because it was absolutely manic. But at the end of the day, people are going to do what they have to do to get their property. And if they have the money, they will throw it out there. So those trends are a bit of challenges that are facing the market itself. And here's two additional challenges that are currently facing the market. One is high rents. Rents in most all markets had actually gone up so high as well that this was really starting to give people pause and asking themselves, why am I paying so much money towards something that's not actually benefiting me? And this is showing up in all of the data because young adults are spending so much of a large portion of their income on their actual rent. So those that weren't quite ready to buy but are still in demand of housing because they need a roof over their heads, that's what drove rents up in the United States. The other barrier has been student debt. This has hindered or crippled a lot of young would-be buyers because they have so much money going out to pay off or pay down their student loans, which can sometimes seem like an endless journey. And this has hurt their ability to save towards a down payment or have that money freed up to actually go towards a proper housing expense. So now we know the state of the market. We know the trends that are actually present in it as well as the challenges. So what are the solutions? Let's get into each candidate one by one and what they might bring in the form of a presidency to the housing market. First, we will start with the current president, Joe Biden. He has been serving in office since 2021, and he is a long-time politician, meaning someone who's been around legislation, DC, and the entire culture that comes with it. In fact, he was elected to Congress, I believe, at the age of 29. Now, President Biden has been a long-time advocate of pushing for affordable housing, and this is a great thing for the economy. Those that are underserved or don't always have access to good options when it comes to housing can never be overlooked, and this is a big credit to the president. One policy that President Biden has been very strong on and will continue to, if re-elected, would be rent relief. He has and always will support efforts to extend rent relief to low-income families in the way of actual programs that can sometimes include abatement and restrictions on how much rent can actually be charged. Another big cornerstone of the Biden housing policy has been to invest in affordable housing or make an effort to keep it accessible. This has primarily been done through the use of tax credits, and it was recently proposed in a State of the Union address by President Biden. He wants to propose tax credits for people that are willing to sell their home and then buy another home, as well as continue to provide down payment assistance for first-time home buyers, either through state or federal programs. Lastly is zoning reform. This is key and it's a complex issue, but quite simply put, he has wanted to increase housing density by encouraging local governments to reform their zoning laws. And I say this is complicated because there's a lot of red tape with these local and state governments when it comes to this topic. So it's not quite as easy as just waving your hand or wand in the air and saying that you want to make it so, because you're having to deal with various governments on so many different levels. So that is a quick summary of the policies and the stances that President Biden has towards it. He doesn't get into too much of interest rate discussion because he recognizes and knows that the US president cannot control mortgage rates in the United States. So here is the impact of a potential another 4 years of President Biden pertaining to housing. First-time homebuyers can continue to enjoy financial assistance if they need it, which is going to give them greater and prolonged access to actual housing. Renters, who are very important in a housing society because we need an equal balance, of course, are going to continue to have more affordable options and continued rental assistance in markets where it's going to be required. So through the tax credits that President Biden wants to present, we can see that there's going to be direct and immediate support for low and middle income households in the United States. This ultimately can help increase the housing supply, which is a major issue, and the president knows this. It can also help deal with the high cost of housing because the best way to address something that is priced too high is to help create more of it. If you can bring supply up, almost creating a little bit of an equilibrium to match with demand, prices will start to cool. Now that's easier said than done, but that's definitely a focus of this current administration. The downside of all of this is there's high cost of implementation with a lot of these ideas, which could ultimately end up discouraging a lot of them from either staying in place or ever even coming to the market. You also have the constant risk of running into opposition from local and state governments when it comes to all of this zoning reform. Again, it's a very complicated issue, and in theory it makes sense, but getting it to actually happen is another thing. So that's the rundown on President Biden. Now, if you feel these policies up to date have been very good for the housing market or economy, or the ones that you see that he's going to propose here for the next 4 years, if reelected, drop a comment while in this video here and let me know if you support them. Next candidate is Robert Kennedy Jr. Now, the Kennedy name is no stranger to politics and is essentially part of political royalty. Everyone has heard the last name Kennedy. Great name ID and should help in an election, of course. But they've long been involved in US politics. So understanding policy and how it connects with the everyday American is something that RFK is no stranger to. His background is in environmental law, so he's been well known for his advocacy in this space. So therefore, it is no surprise that sustainable housing is a major focus of what an RFK presidency could mean to housing. This is a focus on eco-friendly and sustaining housing developments across the country. Also, making sure that the access to affordable housing remains fluid, particularly in urban areas. He said that he would support just about any initiative to build affordable housing, especially in major cities. Kennedy is also a big proponent of investing back into communities. He recognizes that if there are programs in place that will help revitalize urban communities and neighborhoods, that you'll get more people actually living in them, which increases the overall quality of life, the safety, and how ultimately that community or neighborhood or area is viewed. So many areas in the United States have a bad rap because nothing has changed in them. Here in the Bay Area, there are a number of these markets. And while it might not be fair to label them as tougher markets or bad markets or a place that you would never want to live, it's just the reality because nothing has ever gone into actually changing them or been able to sustain any change that may have been implemented. So I think this is a great concept and idea that Kennedy actually has. The investment into these areas is something that we always need to pay attention to because it really builds a strong foundation in any market. The impacts of all this is that for first-time home buyers, it continues to remain affordable and accessible. For renters, you're going to have continued improved conditions in all markets, but particularly in urban areas where rental inventory tends to get a rap for being ignored, not well taken care of, and actually quite crappy conditions. One interesting thing that Kennedy pertains to finance. He wants the government to actually be a partner in home ownership. So like having a rich relative that you would borrow from, maybe an uncle, he wants to actually have Uncle Sam be of help. Now this is not a giveaway from the government. There would actually be plans in place to fund such an initiative. But Kennedy wants all first-time homebuyers to be able to access a very low interest rate program of 3.5%, 4%, whatever it might be from the federal government, which is going to be very competitive with where current market rates are always at, so that people can rely on affordable monthly payments, the access to guaranteed money, and of course, the ability to create long-term wealth for themselves. Now, I think this is a fantastic idea. However, where I take pause is that anything the government tries to get too involved in historically has not actually worked out so well for the everyday American. Government tends to be very disconnected from what everyday people are actually doing. This makes things a little bit more complicated, sometimes slower, ultimately gridlocked. So the advantages of a potential RFK presidency would be community revitalization and investment, environmentally friendly housing solutions, which can have a massive ripple effect on the economy, particularly when you think about how much of a focus society is putting on the climate and how it ties to other industries or parts of the US economy. The potential threat or downside or con of this is going to be the high cost of sustainable development, because this is likely going to require significant policy shifts. And with such shifts come higher price tags for implementation and execution, and that can make it very difficult to ultimately have it come into an actual idea or come to fruition. Lastly would be the very polarizing President Donald Trump. Now, he served as president back in 2016 for one term. His background was from the private sector, meaning he had no political experience coming into this, but his money and wealth has been created through real estate development and acquisition. Now, he is a person that has always thrived and seen markets thrive when the access to credit is very easy and free-flowing and interest rates are cheap. Now, for much of his term in office, that's what he actually presided over, was a low interest rate environment, and he actually was the beneficiary of that. One big housing policy for President Trump when he was in office was a focus on deregulation. He was a big advocate for reducing regulations to help lower construction costs. And if construction costs were cheaper, this was a huge stimulant for the actual overall economy, but it was helping bring more inventory to market. He furthered this through tax initiatives. He incentivized builders and developers with tax breaks so that they would bring more affordable housing to market much faster. Lastly, and something he doesn't get enough credit for, was the creation of opportunity zones. This was a great way to actually invest into urban markets that had either been passed up on, overlooked, or had really run into very, very hard times. These were underserved markets, but what essentially happened was tax incentives were offered for people to invest in these zones. And that investment was helping revitalize strip malls, commercial developments, entire zip codes, which ultimately leads to people coming back in, getting jobs, earning money, spending money in those neighborhoods, so on and so forth, essentially having a massive ripple effect of economic positivity for those areas. There's been a lot of data that have shown that many of these opportunity zones across the country have been performing very well. Many have made a full circle comeback. They're still in place today, even though he's not in office. So it not only served the actual markets or communities where they were located in and the people that would eventually come back into them or were already living there, but it really gave incentive to investors. The administration at that time recognized that if we can incentivize capital to come off the sidelines, put it into something that they believe in, such as real estate, which clearly President Trump believes in that it could be a win-win for both sides. So all of the increased construction that came by way of these tax incentives and a big push from the administration to developers around the country led to a real spike in first-time home buyers. Many were able to enter the market through affordable acquisition because interest rates were so low, in spite of higher prices. And this touched on across all different socioeconomic groups in the United States. Minority home ownership was at an all-time high. First-time home ownership was really starting to actually catch its stride as well. And then, of course, all of the incentives for the investor class to put capital into real estate made for a booming economy because, again, there is a ripple effect when you take the asset class of real estate that goes well beyond just the actual structure. So many other jobs and adjacent industries are impacted from every dollar that goes into an actual property. This also incentivized developers to increase rental units in the market. Whether it was in suburban or urban areas, more and more developers were bringing about apartment inventory to these markets to help serve those populations. So there was a lot of job growth in the construction and development industry as a result of these policies that President Trump had in place. The downside during his presidency was that all of the deregulation can oftentimes, and did in many cases, lead to lower construction standards. Plus, the tax incentives often favor the developers over the actual residents. So the quality of the product wasn't necessarily always on par. Now, this wasn't the case in every market, but many actually reported a big uptick in legal action against developers because of the actual quality of the inventory. The other thing that a very low interest rate environment and quick access to capital can do is lead to inflation or just a runaway on prices. Home ownership, while starting to peak during the Trump presidency, quickly got out of hand to where it was not accessible because, if you remember, federal interest rates were slashed to zero at the time of the pandemic, mortgage rates dropped to absolute all-time historical lows, and the market turned into a complete and chaotic frenzy. That's led us to where we're at presently today. Now, it can be debated a number of ways that if COVID hadn't happened and all of the monetary policy that actually kicked in during that time had not taken effect, what could have happened to the overall real estate market during those Trump years? We'll never know, but it's safe to assume that it would have likely continued on the same trajectory that it had been on for the first 3 years of that administration. So let's quickly summarize all three of those candidates one more time. For President Trump, the focus was on deregulation, opportunity zones, and tax incentives. For President Biden, it was all about affordable housing, buyer assistance, rent relief, and zoning reform. For Robert Kennedy Jr., it was about community development, affordable urban housing, and sustainable eco-friendly housing. Now, some of the key differences between all of these candidates. Trump favors deregulation, whereas RFK Jr. and President Biden support more government intervention. President Trump has long supported economic incentives, President Biden on direct financial assistance and policy reform, and RFK Jr. focused on community and sustainability. So which one is going to be better for housing? With President Trump, you are likely going to see more inventory, and we do have an inventory crisis here in the United States, but you might see a decrease in the actual quality of the product because of all of that deregulation, and affordability may also vary. For President Biden, these are fantastic ideas, but they don't necessarily address the inventory crisis that we have here. So while he is in direct support of buyers and renters, it's all dependent on legislative approval. For RFK Jr., he is focused on sustainable and community development, which is a great thing, but it is ultimately likely going to be very costly and much slower to implement because of all of the processes involved. So there's your summary of all three candidates. I'm curious to get your guys' takes, so drop me a comment on whether or not you agree with some of these policies, have heard of others, or are either in support or opposition to any of them. At the end of the day, each candidate offers a very different and unique approach to solving the inventory crisis here in the United States and trying to bring housing back into some sort of an affordability bullseye. Trump's focus on deregulation, Biden's focus on affordability and assistance, and RFK Jr.'s on sustainability and community. Now, you want to make sure to research these policies a little bit more. Study up on the candidates and what they might actually bring, and more importantly, guys, above all, make sure you vote. A citizen that complains and does nothing about it is nothing more than that, just a complainer. We all have the right to speak up, take issue with what's going on, question it from time to time. That's what being an American is all about. But the obligation that we have, that we are ultimately responsible for, that goes with all of that speaking and vocalizing, is the amazing and incredible right to vote. So we must exercise this. So again, let me know your comments. If you liked this video, please like it. Thank you for subscribing to my channel, and we will see how this all pans out in the coming months as the election cycle continues to run its course. Thanks for watching, guys, and I will see you on the next video.